What's going on, guys? I know in my last video, I promised I would talk about my new short position on Tesla, but something a little bit more pressing has come up. As always, I'm in the communities, I'm seeing what people are saying, and there's again a lot of misinformation coming up, and specifically in regards to one new video made by Trey Trades. He just pushed out a video this weekend talking about two primary things. One, a gamma squeeze, and two, talking about the AMC call options that have expired in the money. We're going to examine both of those, talk about how they are relevant to you and what parts of that video are not quite right and that you should know of before you go into Monday market open. As always, when I do these things, I am not trying to flame the other person, so be respectful of the community, of the person I'm correcting, etc. We're just here to inform, we're not here to enrage, and I think honestly we're all on the same side anyway, which is the side of the retail investor. And so let's help each other out, not hurt each other. As always, what you do with your money, what you do with your shares is your choice. This is not financial advice. I just want to give you facts as I see them. Okay, so let's dive in.
Or on market. Now, where do they purchase these shares from, right? This is coming from the market, right? So you're going to see 14.4 million total shares that need to be purchased so they can get their gamma back up and they're at least net neutral.
So to break this down a little more, what Trey is saying is that there were 150,000 call options expired in the money on February 26th. And you can see that's actually true. Open interest is what determines the total number of call options that are out there. And if you do sum these up, it does equal around 150,000 options. Remember, an option contains 100 stocks. So yeah, if you add all these together, 50,000, 35,000, 23,000, you'll get around 14 million shares. But the assumption that 15 million shares need to be bought on Monday is just completely not true. And let's explain exactly why that is. So the first reason this isn't true is because people have 2 days to settle options. If you see here, it says exercise settlement time. I've double confirmed this with, if you just look at SEC website directly, but essentially, if you have an expired option that's in the money, you have 2 days to cover it. So it might not be Monday that people cover, it might be Tuesday. Now, so you're probably thinking, oh, that's not a big deal, just wait another day. That's true, except for there's another aspect of this. There are two different ways of selling call options. One is you already have the underlying stock, which means even if it expires in the money, you do not need to purchase more. And then naked calls are when you don't have the underlying stock, and if it expires in the money and you still don't have it, then you need to purchase it, like I said, in those 2 business days. The primary thing to note here, though, is that it's not one or the other. In fact, if I originally sell a naked call, over time I can cover it by portion or by full amount. So if I notice that the underlying share price is about to hit the strike point of my option, then I might start buying that stock. And so by the time that it expires, I may already have everything covered, right? Because I don't want to start buying shares over my strike price. That's when I start losing money. I want to buy shares under my strike price. And what I've just described directly explains the next part of our video, which is gamma squeezes.
Right, these are all expired in the money. That is already done and over with, right? But Hedgie still has to purchase these back, and he cannot do so until Monday, right? So once Monday comes, Hedgie has to buy these back. Whatever he does is totally up to him, but he has to pay more than Tendy is paying for his contract. So gamma goes up, Tendy's a happy guy. Gamma goes up for Hedgie. He's not a very happy market maker.
Okay, the first thing we need to do here, which is super important, is to clarify what is gamma. It is being misused all over the place. On Reddit, on my Discord, on Trey's Discord, on Wall Street Bets. I really don't think people have a good sense of what gamma is because it is quite complicated. So to understand gamma, you first have to understand delta. And you can already see this is getting complicated and Greek is literally flying everywhere. But delta, stick with me, is how much a stock's option changes compared to its stock. So if a stock goes up by $1, an option might go up by 50 cents. And that would be the delta. So a delta would be 0.5. Gamma, if you remember your math classes in high school, gamma is the derivative of that, which basically measures how much the delta is moving based off of every increment of stock price that moves. I mean, if you really want to dive into exactly what it means, I highly recommend looking at this Investopedia page. But long story short, even if you don't understand the underlying math that defines what gamma equals, what you need to know the underlying pressure for the option sellers to buy the underlying stock. So what I mean by that is, let's say I have a naked call that I sold to somebody else who bought this call option, and let's say the strike price is $10, but the stock price is currently $9 when I sold it. As the stock price gets closer and closer to 10, there's more pressure on me to buy the underlying stocks because it's more and more likely that I'm gonna actually have to pay that other person those stocks because it's more likely that it gets in the money. So as the stock price goes further away from the strike price, it's less likely that I'm going to have to deliver those stocks. And so I might actually sell the shares that I have because I don't need to hold them. But again, as it gets closer and closer, I'm going to start buying more and more. And they do that gradually, right? So I don't have to cover 100% of it once it hits like 950. I might cover like half of it, and I might cover like 70% of it, then I might cover like 99% of it as it gets really close to the strike price. Another super important part of Gamma is that it changes based off of how long you have until the expiration date. So you'll see here I have March 5th options for AMC Open, and the Gamma right here is 0.15. And that's because as an expiration date comes closer, these people who have the naked calls are obviously going to be under more pressure to buy the underlying shares. If we're really far away from the expiration date, then no worries, right? Like probably it'll go up and down before then, and I have less concern about the execution date like being on my doorstep. You look at April 21st options, you'll see that the Gamma here for puts and for calls is not even half of what it is for next week's options. Because Gamma is essentially just an underlying measurement of the volatility of the option contract, this goes both ways. It doesn't directly correlate to the purchaser of the call option making more money as Gamma goes up. In fact, it could be the complete opposite. All it's saying is that it's very volatile. Say, for example, the current stock price is above the strike price, then higher Gamma tends to mean that it's going down towards the strike price, which means the owner of the call option, the person who bought, is actually going to end up making less money. So at that point, the person who sold the call option might be selling off those shares that they had, making it more naked, for lack of a better word. Essentially, Gamma goes both ways. It's not just like higher Gamma equals better. It also has nothing to do with the profit or loss of an individual. It only is directly correlated to the stock. So to say that like one person's Gamma went up when another person's Gamma went down makes absolutely no sense. It's just correlated to the underlying stock and options prices. I may be wrong here, but theoretically speaking, you can have a negative Gamma squeeze, meaning a intense sell-off. Let's say, for example, AMC starts dropping in price due to either more shorting interest or just people are selling. The market makers or the people who own those naked shorts that have currently covered them will start selling, which will cause the price to go down even further, which causes more people to sell off their covered calls and make them uncovered or make them naked, creating and kind of like, again, that feedback loop of dropping the price. So now that I hope you understand what Gamma is, Gamma only happens before the stock option expires, right? After the stock option expires, Gamma doesn't really exist because the option is no longer moving in value. In conclusion here, the Gamma squeeze for the shares that expired on the 26th has already happened. The Gamma squeeze is essentially the forced pressure for those market makers or for anyone who holds those naked calls to buy more stock to cover their position while it's still not expired. Now, does this mean that there's not still shares to be bought because people didn't cover in 100%? Absolutely not. Of course, come Monday or Tuesday, shares will absolutely have to be bought to cover some of the call options that expired in the money. But it's absolutely not 15 million shares because it's very likely that much of that position is already covered in last week's buy. Remember, market makers do not like to stake one way or the other. To explain that a market maker is like a hedge fund is just not necessarily true. Market makers tend to de-risk their portfolio. So they're looking to just like make the spread transactions. They're looking to arbitrage the market, right? They're trying to say, okay, there's a delta between what this person wants and what this person is willing to pay. So they just make the middle, like they make the little transaction money in between. They're not looking to like go against or for AMC. It's very likely they covered a large portion of their position last week. So bringing this all together into one solid point at the end, like what should you do? Well, I'm not going to tell you what to do, but realize that your decision should probably be a function of how many shares do you think will be purchased on Monday because they were not covered in these naked calls. And the second thing that you should consider, although there is the potential of this positive feedback loop, if buying more call options to cover their short positions, and then additionally the price is going up, and then people are also covering their, through the same time, a gamma squeeze, their naked calls for like next week. AMC in the past has already shown that they're willing to issue new shares to make more capital if the stock price goes up high enough. So you might actually be up against AMC itself. There's nothing stopping AMC from issuing new shares and basically preventing a squeeze and just raking in money for themselves. Anyway, long story short, take everything you hear on the internet with a huge grain of salt. A lot of it is not accurate. I think a lot of people out there are like, no one's trying to harm each other. Like I think most, like there's not, it's likely not bots infiltrating everybody's Discord and giving misinformation. But I think people are just trying to help out, but may not have a full perspective of what they're talking about or be completely informed about what they're talking about. And so it creates gaps and misunderstandings and sort of like a disinformation. If you have anything else that you want me personally to confirm or deny, I love doing deep dives on this stuff. Come to the Discord, hit me up. Next video hopefully will actually be about my new position, Tesla short. If you like this video, please like and subscribe. It does help with the YouTube algorithm to boost up. I'm just trying to get information out. So by you doing that, you're helping information get out. Also, feel free to share the video in AMC Discords to just make sure people are informed. It's the best thing that I feel like I can do to contribute, and likely it's a very easy thing for you to do to help contribute. So yeah, thanks, and I'll see you next episode.